All right, now why don't you guys come to the front bench? Who's here? All four of you come to the front bench. Okay. Who's sitting here? No, the front bench is empty, no? You guys can come to the front. Okay, guys, now let's, in the previous class, we have already gone through all the decision problems. I've given you a quick rundown on just shut that door, Garvit. Just shut that door properly because the noise is coming. That door should remain locked. You should use only one door. Okay, so in the previous session, we have already given you the here. Okay, you guys come to the front. This bench. Okay, we'll see what happens with the rest when they come. Sit on the first bench. Okay. So we've already covered how to go through all the decision problems, okay, how to solve each of the decision problems. Some of the solutions that have been given are kind of arbitrary because we haven't had time to go through the detail of... Okay, fine, never mind. All right, so some of the decisions are haphazard because we haven't had time to go through all the the detailed logic, okay. Okay, so let's continue with where we were. But we started, I think, with maybe sit here, maybe. Where is this? Okay. All right. I think we started with this part, right? We started with time series data and cross-sectional data, and we said that we're not going to go through. I said that we are not going to go through because we don't have time. All right, everything is very rushed. So I'm not covering stock concepts versus flow concepts, which I would normally cover at this point of time. Okay, so I'm not going to cover that at this point of time. Okay, so we are going to go through this. Okay, Hardik and Srishti, you will lose points because you're talking, and don't sit together. Maybe Hardik, come and sit next to Kanika, at least. So, or sit on the extreme other side. Okay, so today is 31st, right? So 31st, we are going to start with, now I need to write down these names. Still haven't started this. Okay. All right. So let's do this. So we were in this module essentially, right? We started with time series data and cross-sectional data, and before I got to covering all the elements of this tracking markets using charts, I had to move into this coverage of decision problems so that you would have some guidance as to how to proceed. Okay. So one thing I would say to you is please make sure that because when you guys came, I found that you're still not. Please follow the rules that I've given you with respect to setting your risk ahead of time. Okay, don't just buy something or sell something and then find out then you're losing money, and then you lose a lot of money, and then eventually you don't know you're kind of frozen because you don't know what to do. Okay, please follow these rules. This is the difference between professional trading and amateur trading. So you have the benefit of of the experience that I've gone through, and I'm giving you these rules. These rules cannot be violated. Shut it properly. This door should be kept. Can we lock this door?
No, you can lock that.
You can lock this. Then lock that. Just lock that so that we have only one door. Okay, so please make sure you follow. There is no question of you have a lot of latitude when it comes to whether you're going to use fundamental analysis or technical analysis. Okay, I'm not going to force you to become a technical trader, although at this point we are trading only as a technical trader, and that's the reason for that is different. The reason for that is that we don't have time yet to go through the methodology of fundamental analysis. That's the only reason that I'm telling you to use technical analysis for the moment, because technical analysis is much simpler to learn. Okay, you can just work it like a surfer. So if you wanted to do fundamentals, you would do this kind of analysis. Okay, you can see here fundamental technical criteria. You have the link to FinViz in your document, so you can practice this. Okay, so you can see all this stuff here. Can you see all this stuff? Price to cash and all this. So this is what fundamental analysis is. Of course, it's also about your analysis of the industry. So if you're analyzing a company like Facebook, which is very digital advertising based, so then you would look at what is the total share of digital advertising in total advertising expenditure. Then what share of the market does Facebook have? Okay, and this is the method that you would follow to eventually derive an estimate of Facebook's revenues. Okay, how much are they going to earn? And then you start deducting the costs, and eventually then you get to the profits. Okay, and then you project those profits, and that's where you get your fair value of the stock, which you've already done, right? You've already done the stock analysis. That's how you. So this is what fundamental analysis is all about. Okay, but we don't have, because this is a very vast body of material, we haven't had time to go through it, but actually to some extent in your FM1 and FM2 you've already done all this ratio analysis. So you can actually also apply this even in your project. Okay, it's just that I don't have time to tell you this, to teach you about fundamentals in greater detail, cover models and all that. We have to do that later on. So this is, I'm not putting restrictions on you with respect to whether you should follow, whether you should be a technical trader or a fundamental trader. Okay, I'm not putting any restrictions on you on that. Okay. All right. So we'll just pause this and take our attendance. But the point I'm trying to emphasize is that I'm not putting restrictions as far as your style of trading is concerned. Right? So, but at least you must make sure that what I've told you with respect to when I decided that when I gave you the example of that ITC NSE, I gave you that example of the ITC trade, right, where you go short. I'm going to use a shorter time frame. So please make sure that you don't fall into this trap. So you have, the point I'm trying to make is that it's a little haphazard here, but the point I'm trying to make is you have freedom when it comes to whether you're going to be a technical trader or a fundamental trader. I'm not preventing you here. You can either follow technical analysis or fundamental analysis. So I'm not going to put restrictions on that. But and what kind of technical style you want to evolve, that also is up to you. Okay, there are two basic styles, momentum and mean reversion, which we'll cover later. But I'm not even going to put restrictions on all that. That's where you bring in your own individual approach. Okay, and remember, at the end of the day, it's all about your own individual approach, because there is no standardized methodology in finance. Okay, because finance is not physics. In physics, you can't just bring your own views to the table. Okay, it's what it is. The theory is what it is. So you have to agree with it. So whereas in finance you have a lot of flexibility. So I'm not going to put any restrictions on you. But as far as this stuff is concerned, the stuff I told you here, that when I was telling you that day that I wanted to look at, the moment I looked at the chart, I wanted to go short. Okay, so I went short around here 270, but I put a stop before entering the trade. As part of the trade planning, okay, I have to figure out now whether you want to put the stop here, you want to put the stop here, put the stop here. That's a different matter. That's your decision. Okay, that depends on the time frame you're covering. But the point is this discipline of before entering the position, you plan the maximum risk on that trade. So here there is no option. Okay, here you don't have any flexibility. Okay, if you want to be like a professional trader, you have to plan your risk and do it this way. All right, so do not just get into the trade, then you have a big loss and then you don't know what to do. If you want to trade like a professional trader, on this point you have no flexibility. You have to follow this rule. Okay, where you have the flexibility is what should be the size of your stop. That's for you to decide. Wider the stops you have, the fewer trades you can do before you run out of money. Okay, is everyone clear about this? So please save yourself the lesson, save yourself the heartache and the time of having to learn this lesson through your own mistakes. Right? Remember, there's a saying in the English language that wise people learn from other people's mistakes. Wise men learn from other people's mistakes, and fools learn from their own. Okay, well, it's a little bit harsh because sometimes you can also learn from your own mistakes and not be a fool. But that the point is that basically you should take advantage of other people's mistakes and not make these kinds of stupid mistakes anymore. Okay, so always plan your pre-trade risk, plan your risk, and then so that way you can remain in control of the process. Otherwise, what happens, because the market is, as you will find out hopefully, okay, through the projects that you're doing, this one and the next two projects, the objective of these projects is to give you a first-hand feel of how brutal and unforgiving and how unpredictable and dynamic the market is. Okay, to develop a first-hand feel of that. So in this business, if you don't keep control of the process, the market will just clean you out. Okay, so and the market has no mercy. You will find very often that just after you eventually give up your position, after losing huge amount of money, and then eventually you feel you can't take it anymore, the moment you cut your position, immediately the market moves in your favor. Okay, so therefore, if you want to avoid all this heartache, there's no need to be emotional in this process. Okay, so you should try to learn from these rules. So this is a golden rule which you should never violate. Always plan your risk ahead of time and ideally put the stop in the market. You saw what I did with the ITC trade that day. Okay, I put the stop in the market. Okay, here maybe it was a different account. Okay, so here, because this is showing a long position, so the point is that you put the stop in the market. And the other point that I would emphasize here is, like here for instance, if this is showing a long position, okay, if I wanted to put a stop, there's one point which I forgot to emphasize in the last part of the video in the previous class, is that watch this element. Can you see what's written here? Time in force. You understand what time in force is? Okay, so by default, so this is the part that because I was in a hurry to finish that material in the last part of the previous class, I overlooked this. Okay, so you will notice that in the previous video, what I had was, I'm going to show it in a different way because the position in this particular account is long ITC. Okay, in that trade that I showed you, that I had gone short. Okay, so because my position is long, okay, so I will have to put a stop order. The other thing that you'll realize when we do these order types, that obviously when I'm long, the stop will be below the market or above the market. If I'm long ITC, look at the chart and visualize. If I'm long ITC, let's say I've gone long at market, my stop order for ITC will be at a level that is below the current market or above the current market. If my current position is long, my current position here is long ITC, you can see that. You can see that here. It's long, 100 shares. Okay, so if the position is long, okay, so I forgot to take attendance. Now you guys won't get attendance because the time is already passed. Okay, so let me take the attendance. Let me just pause this. All right, so what was I saying? I forgot now.
Long or above the market, below the market.
Okay, yeah, so the question was whether, let me just set a time here for this so that people don't get restless. 11:45 a.m., right? Okay, hopefully this time it doesn't go off early. Okay, so the question was that if I'm long, let's say I'm long at the current market, okay, we can, for this purpose, we can look at a slightly, now let's keep it here, so it serves the purpose. So if I'm long at the current market, okay, and my stop, okay, on if my position is long, my stop is going to be below the market or above the market? What is the objective of the stop? And what
Is the value equal to that?
if I'm long? No, if I'm long, let's discuss it. We can discuss it in general terms also, but let's discuss it with respect to the long position. Okay, it makes it a little easier to understand. So if my current position is long, what will be the objective of, what will be the what is the objective of my stop order, of the stop loss, which we call a stop loss order, but let's get used to market professional terminology. Let's call it a stop order. Okay, so what is the objective of the stop order? If I'm long, okay, let's say I'm long at 267, okay, what is the objective of the stop order? What does it do for me?
To go short. Stop your
Yeah, so he's saying to go short and stop your losses. Okay, so but yeah, so it's okay. Essentially, then you can put in a little more general and say essentially the objective of the stop order is to close out your position. Okay, the objective of the stop order is to close out your position, right? So that you don't lose any more money on it. All right. So if I'm long now, and then obviously what is my closeout with the stop order will be a sell order or a buy order? Sell order, okay, because only through a sell order can I cancel out a buy position or long position, okay. So if I want to sell, now you're saying that my stop, I'm just taking on the contention that if I'm long at the current market of 267, then my stop should be above the market. Yes. That's what many people have said, okay. So now we have already established that for a long position, the stop order will be a buy stop order, will be a buy order, will be a sell order. Sorry, so we have already established that we have to for a long position, okay, we are for a long position, the stop order will be a sell order, okay. So now the question is basically that if I say, and the other point is that the objective of the stop order is to limit your losses, okay. So therefore now when you initially place the stop order, it is to limit your losses, okay. That's why it's called a stop loss, right? But the reason we don't call it a stop loss is in all situations it need not limit your losses, all right. So the objective here is, now you see what happens, that if I'm long at 267, and let's say what you guys are saying, the stop order should be higher than the market. So let's say we are accustomed to picking highs and lows. So let's say my stop loss is at 273, okay, or 274. So 267 to 274. So if I'm long at 267 and I sell at 274, am I losing money or making money? Making money. So this can't be a stop order to start with. So we are talking about a situation where we just start out by placing our trade, okay. We have just placed our trade, we have just gone long at the current market, okay, and so now we have a long position of 100 shares. So this cannot be the right answer, that stop order should be above the market, because if you sell it, because when you're long, your initial position is long, the objective of the stop order is to close out your position so that you can't lose any more money, right? But if you place the stop order above the market, then you're not going to lose money on that. You're going to be making money on that. Are you following?
Yes, sir.
Right? So initially, therefore, to limit your losses, that means when do you lose money? You can think of it this way, that if you go long at the current market, okay, then when do you lose money? When the price goes further below, right? So eventually, basically, that you, from that logic, you can figure out, therefore, the stop must be below the market, at some point below the market. Now you can place it at 264, or you want to place it at 263, whatever it is. But the point is, it will have to be below the market, because if you have gone long at market, and so you have a long position, so that loses money only when the price falls from the current market. Are you following the logic?
Yes, sir.
Okay.
That can it will become a short. If market fluctuates, and if we have said that say 265 or 260,
yeah.
if now you will come on market fluctuate, it will go to 260 like next day. Then it will be a short position.
No, why should it be short position? Because if you place, look at your position when you set the amount of, remember that one of the things you have to define when you are placing an order is what is the amount of number of shares. By default here the system is using 100, but that doesn't mean that you have to take the default. You have to decide that. That figure has to be decided actively by you, okay? So therefore, when you place, let's say here I'm long at 267, let's say I'm long 100 shares, okay? So when I place the sell order, should I click on the bid or the ask? When I sell the stop, when I place the stop order, when I want to place the stop order, should I click on the bid or the ask? Am I a price taker in this situation or a price maker? I'm a price taker, right? So the market maker is making these prices. Now, what am I going to do? My position is long. What am I going to do through the stop order? I'm going to be selling or buying? I'm going to be selling. So when I sell I have to sell at the market maker's bid or offer? Bid. So therefore, when you are placing a stop order, you should already have an idea from this logic that, so nothing has to be memorized here, everything is logical, okay? You can see that your position is a long position. So therefore, your stop order has to be a sell order. Is everyone following? If you don't follow at any point of time, you should interrupt and ask a question.
Sir?
Okay? Yeah.
But sir, why will we again execute a sell order? Because when we are placing a stop, it is already at the buying order. So we
Already at the buying order?
when we buy the stocks,
Give him the mic, let him use the mic.
when we buy the stocks, then only we put on a stop limit.
Yeah,
stop
here,
order on
yeah.
that. So we won't have to execute another sell order for that.
No. Here you can already see that there is a position. Can you see that?
Yes, sir.
There is a 100 shares position, right?
So
Okay.
you were saying for after this, like on while you were buying and going long on 100, so you didn't put a stop order on this.
No. What I'm saying to you is that right now you can see that you have a long position of 100,
Yeah.
and you don't have a stop on this. So you need to place a stop, right? So that's what I'm saying. If you already have a stop, then you don't have to place any more stops. But right now you can clearly see, because if you had a stop on this, it would have shown here. This stop would have shown over here, okay? Underneath this position, underneath the ITC row, the stop would have been showing, okay? So that's where we'll come to the time and force part also as well. Is everyone following so far?
Yes, sir.
Okay. What happened? You're not following. What were you saying? You were saying that it'll become a square position.
But going long means we are holding a share for a long term.
No. That long is not like long and short period of time. Long means we have defined it by purchase of base asset. I don't think we've come to the technical definition yet, but I think we covered it. Long means purchase of base asset. Okay, so here when we say long and short as positions, so when long and short is being used to qualify a position, okay, then obviously it means long means purchase of base asset, and a short means sale of base asset, and then obviously the opposite, you've done the opposite to the terms asset. Okay, so but when we use long and short to qualify time periods, then obviously it means for a long time period or a short time period. Is this clear?
In that case, we will set a stop loss that above the market price.
No. Stop. This is a universal rule that whenever you are going long, a stop sell order will always be below, assuming that you have gone long at the market. Okay, a stop sell order will always, or actually that's a general definition, because we are going to discuss one type of entry strategy where you go long via stop orders. Okay, so the definition of a stop order is such that it essentially buys. We are coming to that. I'm sort of preempting that definition. We're going to cover order types, but essentially what I'll tell you is, stop order essentially buys at a price, executes a trade at a price worse than the. I think we have these definitions here once we're covering it. We are going to cover stop orders. So we are going to cover initially three types of. Okay. So essentially, the way you think about a market, about a stop order, we are discussing stop orders now. So we're going to sort of cover it in a slightly haphazard way. The idea behind a stop order is that a stop order it can be, when I'm using the word stop order generally, that means it includes buy stop and sell stop. Okay, you can either say buy stop, sell stop, or you can say stop buy, stop sell. Okay, it has the same meaning. Okay, that it's it has two things. When you say buy stop, sell stop, it means that first it's a stop order, and the second that it's actually performing a buying action or a selling action. Okay, so the idea behind the definition of a stop order, essentially, if you want to conceptually be clear about a stop order, what it is that it executes the trade, whatever be the trade, buy or sell. It executes the trade at a price less favorable than the current market. This is the way you should think about the stop order. Okay, this is a general definition of a stop order. Just think about it first, that a stop order is something, because remember, stop order can only be of two types. Either it's a stop buy or it's a stop sell. Okay, there are only two types of stop orders. Okay, so there are some other qualifications like stop limit and all, but pure stop orders, only two types, which is buy and sell. Every order is only of two types in that sense. Okay, so now the basic idea behind a stop order is that a stop order will, the characteristic of a stop order is that it will execute the trade, okay, at a price which is less favorable than the current market. Okay, this is the general definition of a stop order. Think about it this way: a stop order always executes the trade, whatever be the trade, buy or sell, at a price less favorable than the current market. Okay, so if you just remember this, I was trying to work out a different I was trying to get you guys to come to this idea from a different angle through this position. But now if you come back here, if you understand the definition of I was actually trying to, before giving you the definition, I was trying to get you guys to understand the definition through examples. Okay, but if you understand this definition of a stop order in a way, you're just memorizing the definition. A stop order will always execute will also always execute the trade, whatever be the trade, buy or sell, at a price less favorable than the current market. Okay, so therefore, if you see, obviously, if I'm long at 267, okay, and I want to place a stop sell order, that stop sell has to be below 267, because it's much better for me to sell at 267 than to sell at 263. Are you following? Okay, I'll just complete the logic and then you can understand. So in a way, it's better not to come to the definition first, better to understand it logically, that what the logic that we went through earlier, that I'm long ITC, I need to place a stop order. So the question I asked you was whether the stop should be above the market or below the market. Now the objective is to stop initially is to limit your losses. Yes. Okay, at the initial point when you have placed the trade, you have just placed the trade. The objective is to limit your losses. So if some of you said that the stop should be above the market. Now this stop would have been a stop sell because my position is long. So if I'm long at 267 and I sell at 274, then I'm not losing money, I'm making money. So this can't be a stop order for this position, right? So the initial stop order for this position has to be at some point where I'm limiting my losses. So I'll have losses. It's much better to understand the definition in this way because it's more logical. That if you have a long position, you will only have, and assuming you go long at market, okay, all long trades, short trades, everything is at market. If I have a long position, I'm only losing money when the market is dropping from the current market levels. Otherwise, I'm not losing money. If I go long at the current market of 267, I lose money when the price drops from the current market relative to the current market, right? So therefore, wherever I place my stop, because the objective of my stop is to limit my losses, it has to be at some point below the current market. I think it's much better to understand it this way rather than to understand later on. Once we understand it this way, then you'll remember the technical definition of a stop order. Okay, but it's better to understand it this way. Are you following now, everybody?
Yes, sir.
What happened, Tanya? You also came in late. I marked you absent, but I marked you absent because I didn't even see you. But did you come late or not? Okay, you came after the 40-minute after 9. Okay, fine. So I marked you absent because I didn't even see you. Okay, so I only saw Ganotra and Gulati coming in late. Okay. So so are you following now? That the stop order has to be below because the objective, this is how the logic should progress, okay? The stop order, the objective of the initial stop order, okay, which is why it's called a stop loss order in sort of slang language, okay? That the objective is to stop to limit your losses. Now when you have gone long at market, losses will only start when prices drop from the current market, not when they rise. When they rise, you're making money. When they drop from the current market, only then you have losses. So the stop loss on a long position has to be below the market. The stop order on a long position has to be below the market. And then you reverse the logic for a short position. That when I went short the other day, when I went short at around 270, whatever the price was, 272 or something, okay? And then I said I placed a stop at 274, okay? Why did I do that? Because when I'm going short at 272, I start to have losses only when prices go above that current market level, okay? So therefore my stop had to be somewhere above this, and that's why I told you that you could have placed a stop anywhere. I was going short at 271, let's say, and then I could have placed it either here, okay, which is what I did, but you could have also placed it here, you could have also placed it here, okay? Are you following the logic? When I went short on the other login the other day, the previous day. Is everyone following so far?
Yes.
Okay. So so this is where we are now. So this is the first point that I wanted to emphasize, that in line with, because I saw some confusion when you guys came about where you place the stop. Okay. So the point I'm trying to tell you to emphasize here is that you have a lot of flexibility in terms of how you will trade even as a technical trader. Okay. And whether you want to use fundamentals or technicals to form your decision, but where you should not have any flexibility, adopt this as a golden rule, that before you enter any trade, you should have already planned your maximum loss on the trade, and ideally you should put the stop into the market, okay, so that you have nothing to worry. Because sometimes, you know, what might happen is you might think that I'll watch the market, okay, I might go short at 271 and I don't want to put the stop into the system, okay, you'll see what I mean by putting the stop into the system, but I don't put in the system remains like this, Okay, the system remains like this. I'm long 100 shares, then we can take the long example now with what the system has. So I'm long 100 shares, but you don't see a stop under this ITC row, which means I've not entered a stop into the system. So what am I doing? I am actually just saying that, okay, I am long ITC at 267. I will get out when the market drops below this 263, 264, but I'm not putting the order into the system, okay, because maybe I want to reserve some flexibility. Now what might happen, the reason you should not do this, and these are all golden rules, now these you can't violate. The reason you shouldn't do this is because something might happen, the power might go out, you know, your internet connection might go out, and then when the market is suddenly crashing below 264, then you can't enter your order because you don't have power, or you don't have the internet, or some other thing has happened, or there's some earthquake in your building, you have to run down the stairs. So all kinds of stuff can happen, okay? So therefore you should always place the system, you should place the order into the system at the time that you enter the order. Okay, in fact, one good type of order which we hopefully will have time to cover, you can research that on the IB, which is there's some concept called a bracket order, which is basically where you enter the entry. It's a limit. You usually works with limit orders. Okay, so you enter the price at which you want to put on the position. At the same time, you enter the position price at which you want to take profits, and at the price at which you want to stop losses. All three enter together, so everything is taken care of. Okay, so you have the position, you'll have the position later on when the market goes to your level, and then you'll automatically have a two-sided bracket around that order. That's why it's called a bracket order. So one price at which, so essentially, let's say if I've gone long here, I would put in a bracket order essentially to go long at you can put it against the market also, against the current market also order as well. So if I go long at this current market, the bracket order will essentially, there'll be one stop at 264, and there'll be maybe a take profit at wherever I want to put it, if I want to put it at 310. Okay, so that's called a bracket because it's on both sides. Yeah, I'll show you one sec. So, but first let me show you the golden rule that I was telling you about, that you must always put the order into the market. First of all, you must limit the losses, pre-plan your risk on the trade, okay, and also put the order into the market. That's where we'll come to this point. Okay, so now I have gone long at 267, so I have to take a decision where I want to put my stop. In this case, I'm assuming that any new low, so anything below 264, okay, so I'm just taking it as 264. In practice, you'll have to read out the new low. So what I'm saying is that, okay, I'm going long because obviously, again, you see the logic of it. I'm going long because obviously that means I feel that this downtrend has ended. Okay, so the moment it makes a new low, that's proving my assumption wrong, because if this downtrend has ended, then it should not make any new lows. Are you following my logic?
Yes, sir.
So therefore, the logical place for me to place my stop is below this, just below this. As soon as a new low is made, it means that I'm wrong, so I should get out. My assumption was incorrect about the end of the downtrend, and therefore I should get out. Are you following the logic? Yes. Okay, so I place it at 264. So what am I going to do? I already have this long position. So this is a long position. So the stop order will be a sell order or a buy order? Sell order. Okay, and am I a price taker or a price maker? I'm a price taker, and these prices are made by market makers who are price makers. So when I am going to sell, I'm going to sell on the bid or the offer? I'm going to sell on the bid. So therefore, when I'm placing a stop sell, I'll just click that. Okay, it comes out with some default items, but one thing you can see clearly, because I clicked the bid, it came out with a sell. Are you following? If I had clicked the offer, it will come out with a buy. So it's given me some defaults. Okay, so this first thing I'll do is I'll check the position size. If my position here was 700, I would have had to change this to 700. Okay, but right now, because my position here is 100, I make sure that it's the same position size. Okay, now what I do is, what is the position? I said 264. Okay, and so the way the system works is, the NSE trading works is, it's 5 paise, so 263.95. Are you following the logic? Break below 264. So 263.95 is the break below, is the first break below 264, because 264 is not a break below 264. So I can't place it at 264. I have to place it at 263.95. Are you following?
Why do you have to break below? You can't get at?
No, because good question. But what is the rule of a downtrend? Lower lows. Lower lows. So is 264 lower than 264? Yeah, so what have I done? It's now at, let's zoom in a little bit, okay? It's 267. I've gone long at 267, which means I believe the downtrend is over. So logically, my stop should be the moment the market makes a new low. The market is essentially telling you that your view about the downtrend being over is not correct, because the downtrend is continuing. That means, because lower lows means the downtrend is continuing, right? Is that clear? Are you following? So the reason it has to be at 263.95 is because 263.95, when you're trading in 5 paisa increments, is the first instance of a lower low than 264. At 264, you don't have a lower low. You can't say that 264 is lower than 264. It's only equal to 264. That's not the definition of a downtrend. It has to be lower low, not equal to the lowest previous low. Are you understand? Are you able to follow the difference? The word is lower low. So equal to the previous lowest low is not the same as lower low. Yes, yes. Are you convinced? Are you convinced, Chug? Chug is still not convinced. Yes.
Sir,
Are you following my logic?
I am following your logic, but I think if it is at 266, even if it is at 265, we should put it at 264. You are saying that it won't be a lower low until and unless it is less than 264. Because the lowest low till now has been 264.
Yeah. We have to read it from here, but I'm assuming that it's 264.
Yeah.
Here, for the sake of argument, let's assume that this lowest low so far is 264. Okay. So that's why my logic is that because I'm going long, which means I'm saying that the downtrend is over. So what is the first warning that I get that that my assumption is wrong? That is when the market makes a new low. When the market makes a new low means you have a pattern of lower lows, which means the downtrend is continuing. Okay. So after I put on my trade, the market has established a pattern of lower lows again, which means the downtrend is continuing, which means my assumption is wrong. So therefore logically I should exit my position. So I should only exit not at 264 but 263.95. Because 263.95 is actually lower than 264, but 264 is not lower than 264. Are you following? Is everyone following? Yes, Saruni, you are looking confused. I got more confused by this long discussion. 264 is not lower than. This confused more people. 264 is not lower than 264. Okay, clear now? Chok, are you clear? Okay, listen to it once again. And so therefore it's 263.95. Okay, so 263.95 is set. Okay, the other thing, now this can't be a limit order. Okay, these are all defaults. I need to change this to a stop order. Okay, then the other thing that I forgot to mention in the other towards the last part of the video on the other day in the previous classes, this should not be day, because then it should be GTC. Okay, which is this? What does GTC stand for? Good till cancelled. Okay, so GTC order. Okay, this is what you need. So if you have a GTC order, now you can go on holiday, because day is only for that day. Oh, sorry. 1 minute. 1 minute. Let me just cancel this. I don't need this. Okay. So if you go to day, you'll see this. See, what does day say? Read what the day say. Okay. So day order. What does the day order mean? So you have to be careful about this. You can go into the system and change the defaults. Okay. But what this means is essentially that if you place a day order, okay, this order will expire at the end of the day, which means next morning when you log in, the order will no longer be there.
Okay, so if they have put a stop while buying.
Yeah.
So and it was a day order. So then it will won't work. That stop won't work after a day.
Yeah. Next day it won't be there.
And we have to put on a.
You have to put it on again. So this is where you get the benefit. Like I remember using some other software like Motilal Oswal and all that earlier, where these brokers don't have, most Indian brokers don't have, at least they never used to have this facility of placing GTC orders. Okay, because the native NSE system doesn't accept most exchanges don't accept NSE as a native exchange software at the software level, exchange software level. They only accept day orders. But what this is happening is this GTC facility is being given to you by IB. Because IB software, because this, remember, you're dealing with IB software, you're not dealing with NSE software. You're dealing with IB and IB is dealing with NSE software as a technology interface. Try to understand it this way, okay? You have to understand technology as well. So Sukriti and I'll have to deduct marks for Sukriti and Anjum also. Major party going on there. Okay, what can we get Anjum to the front bench? Come to the front bench. No, don't waste time. Now just come to the front bench. Just come to the front bench and leave your phone over here. I want to look at your phone. Leave the phone here. Come to the front bench. Then let me just write down your names. Okay. Where were we going?
Sir?
Yeah.
So these both students are from one group, so marks will be there.
Only once. Okay. So you have that. So I do have some mercy. Okay. All right. Okay. Now let's get back to the discussion. So GTC, please remember this, okay? You can go into the system and check what happened to you. You're not following the instructions, okay? So you remember this thing. I made this mistake in the previous session because I was in a hurry, okay? So make sure that your orders are all set to GTC, because GTC is always superior to day, because you can always, when you have a view of that you want to cancel the order, and you really should not cancel a stop order until the position is closed. Okay, are you following? So this is what, now you see if I transmit this order, where's the phone? Give me your phone. No, I can't get up. This thing will, okay. All right, okay. So now you see that if I transmit this order, now everything is okay. It's a sell stop, it's a sell order, it's a stop sell. It's the same amount of shares as my long position. I made sure that it's a GTC order, okay, by clicking. This is called time in force. So GTC is, time in force is actually a variable, okay? In a sense, it's just like a string variable, okay? It holds strings, okay? You got to think in terms of variables and software and things like that. So time in force is one of the fields that you have to enter into an order. Whenever you're dealing with a sophisticated system like this particular TWS, it will ask you, what type of time in force value do you want? Do you want day? Do you want GTC? There are many other values, okay? Fill or kill, all kinds of stuff. You can see if you go down, okay? You can see all this. Good till, take good till date. I don't even know what DTC is actually. So you can read about these order types and on the IP web page, but there are also other options like fill or kill, etc. Okay, so the point is mainly you need to worry about day orders and GTC orders, and you should always place GTC orders. It's the safest bet. Okay, all right.
So can we add partial stop loss for the order?
You can always do that. If you don't want to sell the entire 100 shares at 63 at whatever this price with 265.90. Now how did this get to 265.90? I thought we needed 263.95. Okay, so this you have to make sure that you check the price also. 263.95. Okay, so you can always place that. So then in that case your risk is not fully closed. So if you have 100 shares long at 267 and at 263.95 you want to exit only 50 shares, then you still have a balance of 50 shares left.
We can set other.
You can set another stop for that. You can set another for, but then your total loss will have to be calculated taking the average exit price on those two stop orders. Okay, so you don't have a clear. You can calculate that. Okay, you can always do that. All right. Yeah. Give her the mic. Well, let her finish. Let her finish. Yeah.
So I have a question. If we put it on day rather than GTC, so if the price doesn't reach 263.95 for that day, then also the stocks will fill out.
No, why should it fill? The stop will only fill when it.
Does it matter if we choose day or we choose GTC for the stop?
Okay, good question. Okay, why should we? Why am I insisting on GTC? Okay, because what are you concerned about? Okay, when you place this order at 267 and 264, okay, why did you place this order below 264? Because you, as soon as the market goes below 264, that is the signal to you that your assumption is wrong and you to exit your position. So now, does it really matter whether it goes below 264 today or tomorrow or day after? Doesn't matter. right? Even if it stays here the next 2 days, it just stays at 267, and then on the third day it drops below 264. The implications for your view are the same, right? So the reason you need a GTC order and not a day order is because it's the breaking of this level that is important, not the day when it happens. So if you place a day order, it will only be there for today. Next morning the order will disappear. So that's why you need a GTC order. Okay, so are you following? Is everyone following? Okay, you may find that if you guys are trading on SMC and all that, you use some other software. Okay, you're also using some. You may want to check whether they have a concept of GTC order. Because the last time I checked on Motilal Oswal and all these people, they didn't have GTC. Okay, so this is one of the problems that you have. But if you look at most US brokers, they will have all provide GTC. This is actually a broker functionality. The exchange does not provide GTC orders. The exchange only accepts day order. So what the broker is actually doing is, the broker's software, the broker's programming takes care of it. They see that I've entered a GTC order. So the broker will watch the level for me. And if this 264 level is broken, doesn't matter when it's broken, maybe 3 days later, 6 days later, 7 days later, the broker is always watching that 264 level for me. And the moment it breaks, the broker will transmit a market sell order into the exchange server. Are you following the logic? So this, you got to also understand how the architecture works. You should understand this architecture. We had a brief discussion the previous day on servers and co-location and high frequency trading. You know how the broker software, when the brokers wanted to locate the server close to the NSE server, and that's why the NSE also got a very big penalty from SEBI, right? Because we discussed co-location. Yeah. Okay. So yeah, Tarun, you still have your question?
Sir, some other issue.
Okay. No, you had a question when Tanya was speaking. Well, let him go first, then we'll come to you. Okay. Yeah. So now what we do is, now let me just complete this before you start your question. The job is not over yet. You have to set all your stops and then transmit it. Then you get all this messages. Okay, you can just override and transmit. And now when you get the green signal, order is waiting to trigger on the NSE, which means IB, as far as IB is concerned, IB has given you the green signal, which means he's saying to you that, okay, I've got it. I've got your order, I'm watching your order for you. Okay, so now you're complete. So this is the part that I'm saying that here, to avoid any painful learning of lessons, this gospel you should take from me. Before doing any trade ever, you should plan your risk ahead of your trade. Okay, so here I decided to go long at 267, but before that I planned that I would exit below 264, but I'm only losing about 3 rupees per share. Okay, and then I can size the position depending on how much total money I want to lose on this particular trade, which should also be related to your total capital in some systematic way. It should be a very low percentage of your total capital. These golden rules of risk management and position sizing and order entry, you should always follow. If you can do that, it will give you it will save you a lot of heartache and a lot of money also. Okay, and it will keep you in control of the process. You have to be in control of the process because this market is like a, it's a fearsome entity actually. So if you don't stay in control, the market will just carry you out. Okay, so you have to be very careful. So this always, now the order is in the market. A GTC order is in the market, protecting your maximum loss, capping your maximum loss. Now you don't have anything else to worry about. Your defense is totally taken care of. And now if you have upside, now on this position that I have, if I have upside, if my view is correct, that the market is going to go back up to 311 and higher than 311, then I can enjoy the profit. I don't have to worry about anything. My downside risk is the problem. The defense is the problem. Are you following my point? Okay, so now this is what I wanted to say. On this, don't play around on this. This system you always follow. Pre-plan your risk, determine this maximum loss, okay? Enter the order into the system as a GTC order. Then you're, set to go, okay? All right, okay, yes, Tarun, now what is your question?
Sir, how is your order minus 5,000 for the TCS?
No, I didn't get you. Minus?
How is your position is minus 5,000 in TCS?
That means I must have sold TCS.
Before buying?
Yeah, Okay, so you're talking about short selling, okay? So what he's talking about is short selling, because I must have entered into the system earlier and done a 5,000, some other day I must have done this trade, okay? That I sold 5,000 shares of TCS. So what Tarun is asking is, how did you manage to sell 5,000 shares of TCS without buying, okay? So this thing is called short selling, okay, which we have to get used to in the short selling is pretty new in India, okay? All right. So, but then in general in finance, you have to get used to this concept that you don't have to buy something before selling it. Okay? You can just sell it. Okay? And the way you want to think about it is basically that, yeah, that if we want to look at it this way, we can put some of it as here. Okay? Okay. There's no need to buy. This part of the note is with you guys, so no need to buy before selling any base asset. This is a general conceptual idea in finance, okay, as a general concept. I'm just going to write this down as a general concept. Now there may be some restrictions in certain markets, okay, like in India you had restrictions on short selling for a long time. Other markets there may be all kinds of restrictions, but as a general concept, okay, when you, the way you want to think about finance and the way you want to think about financial markets, okay, you do not want to think about having to buy before selling any base asset, okay. So essentially the way you think about it is, I don't need this, the way you think about it is that so this is a very important general concept in finance, okay. Whatever is sold is borrowed and sold, and whatever is bought is bought and invested, okay. Okay, are you following the logic? Okay, so essentially you can think of it as buying a house with 100% debt, okay. So what are you doing if you're buying a house in India? What are you buying? You're buying let's say a piece of real estate, okay. Your base asset is a house, okay, and what is your terms asset? Indian rupees. The correct answer is Indian rupees, okay. So your terms asset is Indian rupees and your base asset is a house, okay. So if you think about this example here, what you're doing is whatever is sold is borrowed and sold. You're selling Indian rupees, you borrow the entire value of the house, okay. You may not get a housing loan in fact on those terms, but let's assume you can, okay. So you borrow the entire amount of the house value, okay, and then you sell the Indian rupees. So you borrow the Indian rupees and sell it. And then what you do with the house, the moment you bought the house, you invest it in the sense that you make sure it starts earning some return, so you put it out on rent. Okay, this is the idea in this particular example. Okay, this is how you would apply this general principle in this particular example. Are you following what I'm saying? Okay, so this is the general idea you want to keep in finance, okay, that in financial markets, that we don't have to necessarily go long before we sell something. You can go short, okay, and that is called short selling, okay. So this is basically, you can actually check on the IB website, they have a lot of interesting guides as well. They have a guide to short selling, okay. The idea mainly is that you borrow the shares and you deliver, because when you sell something, obviously you have to deliver the shares. If I'm selling 5,000 shares of TCS, I have to deliver to the guy who bought those 5,000 shares of CCS. I have to deliver those shares to him. Remember, because a contract is a transaction in a financial market is a contract to exchange assets. So when I'm selling 5,000 shares, my part of the bargain is that I have to give him 5,000 shares of TCS, and his part of the bargain is that he has to give me the equivalent amount in Indian rupees. That is the exchange of assets. Okay, so when it comes to the settlement date, the actual exchange of assets will take place. Remember all this stuff that you studied, transaction dates and settlement dates. What happens on the settlement date? Okay, so therefore I'll have to deliver 5,000 shares. Now where will I get 5,000 shares if I don't have them? Okay, so I have to borrow those 500. So there's a concept of stock borrowing. Okay, we have just started that in India. Okay, concept of stock borrowing, where basically people who are holding shares of TCS for longer periods, like institutional investors, they can lend out those shares. So you have a fee for that stock borrowing. Okay, but the point is that you can borrow the stock. So what I'll do is, now I've sold 5,000 shares, I will borrow 5,000 shares through the stock borrowing mechanism. Okay, so I'll borrow the 5,000 shares and I will deliver to my counterparty on this trade. Is this clear? So as long as you have a facility for borrowing the underlying asset, if you have a facility for any market where you can borrow the base asset, you should be able to go short, do short selling, where you don't have something but you still sell it. Okay, are you following? Now in this particular market, you might find that sometimes when you're trying to sell, you might find that it gives you a message saying there's not enough stock available to for short selling. Okay, so in this particular case, because I have a minus 5,000 in TCS, that means when I went short, there was no such restraint. That 5,000 shares of TCS were available for borrowing. Sometimes what might happen is that in certain stocks, like what's happening in Tesla in the US, because so many people are going short Tesla that there's not enough stock to borrow. So there's a problem with a supply of Tesla shares for borrowing. So therefore that is placing a limit. So that's a situation that can develop in any particular market. Like I remember, I don't know which one, whether it was ITC or some other stock, which Axis Bank or something, which I was trying to sell, and I got a message saying that there isn't enough stock available to sell. With not enough stock borrowing is available, etc. Stock borrowing facility, etc. So you might get this message in certain stocks. Okay, that depends. That's a situation that differs from time to time, and it depends on the individual stock and the situation in that particular market. Are you following? These are all different markets. The market for TCS stock is a different market. The market for Axis Bank stock is a different market. The market for Tesla shares is a different market. Why are they different market? Because at least one of the two is different. The moment I move from a market for TCS shares to the market for Axis Bank shares, the terms asset is the same, but the base asset has changed. So because any of the assets change, we call it a different market. Okay, are you following? So we have two questions. Okay, Tanya, yes, give her the mic. We'll come to you. Garvit also has a question. Okay. Yeah. So we never came to Parul actually.
Sir, actually I don't have a question. I just want to tell you that essentially we have delivery and intraday rather than GTC is same as the delivery.
No. Those are two different things. What you're talking about is delivery and intraday. Those are two different things.
But sir, the method is the same, that we can hold the shares for long.
No. Holding the shares is nothing, not the same as GTC. GTC is a time and force, is a value for the field. Time and force is the field. You understand? You guys have done databases. It's almost like a database. You have records in a database and you have fields. Okay. So the records are the rows and the columns are the fields. Okay. So essentially, when you're entering an order, okay, that has certain fields, certain aspects of the order have to be specified. Right. So one of the things that you have to specify is time and force. How long? So when you're talking about delivery and intraday, that is referring to shares where you either, when it talks about intraday, those are trades where you do not intend to actually settle the trades. Although in actual fact there is, conceptually you have to think of it as settlement, but you're closing out your position within the day. That's what it basically means. Okay. So delivery and intraday is actually not good terminology, because even the ones you're doing intraday, they are also being delivered. It's just that, try to understand this concept. Okay. What she's raising, I'm just coming to Tanya's question. Okay. So short selling is essentially selling base asset that you do not currently have a long position in. Is this clear? Yes. This is called short selling. So basically you don't own it. I don't want to say own because it's kind of slang, layman's language. The technical language is, I do not have a long position in that asset, but I'm still selling it. That's what Tarun was asking. How did you manage to go short 5,000 shares of TCS? Okay. So now coming to what Parul is talking about. Okay. Delivery and intraday, this is actually a bad classification. Okay, again, this is one of the problems, not just in India, all over the world. People use words without thinking about the conceptual implications of that. When I say delivery and intraday, if I classify all the people in this room into boys and girls, that means I can say the boys are not girls and the girls are not boys. Is that clear? Okay. So if I classify trades into delivery and intraday, that means I'm saying that in intraday trades there's no delivery. Is that fair? Okay. This is actually not correct. What happened? Not clear. Any kind of a taxonomy that you have, okay, if I classify, one of the golden rules of taxonomy is that your taxa have to be mutually exclusive. The taxa are the categories. So if I divide VIP students into MCA students, BCA students, LLB students, LLM students, that means the LLM students are not BCA students, MCA students are not LLB students. Is that clear? So any kind of if it's a good classification, sometimes you have bad classification or bad terminology. Okay. So if it's a good classification, then these are called these categories. Okay, we are using big words, but these are categories, taxa. Okay, so any classification that you do, okay, everyone understands classification, any kind of taxonomy. This is a taxonomy of VIP students, BCA students, MCA students, etc., etc. So in any taxonomy, the categories or the taxa should be mutually exclusive if it's a good taxonomy. If it's not mutually exclusive, then if I say students with glasses, BCA students, if I create categories like this, now some of the BCA students might have glasses. So now I've created a problem because the categories are not mutually exclusive, right? So therefore a good taxonomy will have mutually exclusive categories. So here what the problem with this what she's talking about is that there's a taxonomy of trades. Trades are being classified by the SMC system into delivery versus intraday. This is not a good classification or good labeling, because if I do this, the moment I classify into categories like delivery and intraday, that means I'm saying intraday is not delivery, right? So there's no delivery happening in intraday trades. This is actually not correct. This is actually day trading versus not day trading. That would have been a better classification. So what the intraday means essentially is actually day trading. And what is the definition of day trading that we went through? No position at the end of the day. Okay, no position at the end of the day. That's all it means. You can trade 60 million shares, but there has to be 60 million in, 60 million out. No position at the end of the day. That's the definition of day trading. So the correct definition actually in this, the classification should have been, okay, not day trading. Okay, this is a crude way of putting it. Not day trading, or we call this position trading. Sometimes in the market this is called position trading. The market lingo is this is called position trading. So in the market we normally distinguish between day trading and position trading. What position trading means is carrying positions beyond the day. That's basically what it means. Okay, so if you think of day trading, understand the definition of day trading, that will be easier. You cannot. So the moment I say if I know what day trading is, then I know what not day trading is. The moment I carry a position beyond the trading day, if I close the trading day with a position, either short or long, that means immediately I am in the not day trading category. Are you following? So keep the definition of day trading in your mind, and then you can understand what is not day trading. And so position trading is not day trading. Okay, so the reason this classification is wrong, okay, delivery versus intraday, the reason this classification is wrong is it's a bad labeling or bad taxonomy, is because in intraday trade, if you do 60 million in, 60 million out, okay, you are doing day trading, okay, which is intraday, okay, but all those shares are going to get delivered. Those 60 million in that you bought, those shares will come into your account. In practice, there may be a net settlement, okay. So, but in practice, conceptually, what is happening is all those trading, all those net shares of 60 million is coming into your account, and all the 60 million is going away from your account. So your net position in shares at the end of the day is actually zero. This is clear. So this is not a very good taxonomy. Actually, the correct way to define it is actually that there is intraday trading versus position trading. But then again, this is not connected to the idea that I was talking about, that is GTC. This is different from GTC. GTC is something which is a time in force field for an order. Okay, so the difference, so the order options that you have, like instead of GTC, I could have made it a day order. Okay, which only, so GTC and day order, these are basically time in force values. Okay, these are string values. You know what a string is, right? You use Excel, you know what a string is. String is text. Okay, so in the programming lingo, string is just text. Okay, so this is just this will have a string value, this particular field, time and force. So GTC and day order only means that if I put day, then the system will only watch this order on a day basis, and it will stop after that. So there are many other types. It's not just intraday and delivery. Okay, there are many other, like I said, fill or kill. Okay, many types of orders we can come up with. We can look at the list. Okay, there are many ways you can fill this field, time and force. Okay, so GTC, good till date. The GTD is another one. You can specify a date, maybe up to 15 days from now. You can specify a date. Then you can put GTD. These are all the different ways to fill this field of time and force. This is only a way of instructing the system as to how long will you watch this order. Okay, so again, if you come back to delivery versus intraday, what will happen is, this doesn't include the concept of GTC versus GTD. You understand the difference between GTC and GTD? GTC means good till cancelled. That means you watch it until I come and actively cancel the order. Okay, so it can run for 5 years. Actually, in practice, they only watch it for 1 year. That is just a system hack that they've done. But technically, conceptually, they're supposed to watch it for like even 20 years because it's good till cancelled. Okay, but GTD, I can place GTD for the next 7 days, maybe for 15 days, 20 days, 21 days. Now that's slightly different from GTC, because after 21 days, if I place GTD for 21 days, after 21 days, it will cancel it. Okay, so now you can see all the nuances. Now just by saying delivery, you don't capture all those nuances. All you're doing with delivery, by what you're trying to indicate, is stuff that is beyond, that is not intraday trading. It's essentially a net position. Anyway, you're carrying a net position. So the correct definition is really to do position trading or intraday or day trading. This is clear. Okay. Now, to also understand the difference between GTC and this concept of day trading or not day trading versus GTC and GTD and day or fill or kill, all these are actually telling the system how long you should watch the order. Okay, that's why the field is time and force. Okay, so this is very specifically about time and force. Are you clear now? Okay, yes, Tanya, what is your question?
So my question was that you bought 5,000, that you sold 5,000 shares.
Yeah.
You did short selling. So is it necessary to buy 5,000 shares within the same day, or we can go GT? We can do it anytime. Like
this again is this depends. Conceptually, you should be able to do it for as long as possible. Okay, but if the person is calling, again, it really depends on how long the shares are available to borrow. Because remember, you have now borrowed shares. Okay, so if there is a situation where the shares are being called back by the lender of the shares, if the lender of the shares calls back and there is no net supply, so normally the broker will arrange this borrowing facility. Now, if there's a situation like you have sometimes in cases like Tesla, where there's a shortage of stock for borrowing, okay, so if TCS also develops that kind of situation, okay, then the broker might inform you that your stock is no longer available for borrowing, you better close it now. That I'm not able to arrange stock for borrowing beyond, say, the next settlement, so you'll have to close your position. That is a market imposed constraint that you have no way of predicting when that will happen, and that depends on the market dynamics. It's basically connected to how long are the shares available for borrowing.
So can we put a stop loss in this case also then?
Yeah. Stop loss is not connected to this idea of short selling. Idea of short selling is only connected to this itself. That short selling is selling a base asset that you do not currently have a long position in. Okay, let me clarify that. By borrowing it and selling it. Okay, that's why I said that it generally in finance, when we want to think about transactions in financial markets, we want to have this concept that I don't have to have it to sell it. I can borrow it and sell it conceptually. Now, in practice, I may go and try to sell Tesla and I find that there's just not enough Tesla stock for borrowing, in that case it's too bad as far as Tesla is concerned, okay? But I may come to TCS and find that, okay, TCS stock is available for borrowing, so I can short sell TCS, okay? But conceptually, you should have it in your mind that whatever is sold is borrowed and sold. That will put you into the position of starting to think about the financing cost of your transactions. Okay, so if you're borrowing something which is which is costing you 15% to borrow, and then when you buy the asset and you invest it somewhere and that is only returning 10%, then on that carry itself, okay, that interest differential, that you're losing money. So this stuff, whatever you have bought, had better start shooting up in price real fast, because every day you're getting killed, because your borrowing is costing you 15% and your investment is returning only 10%. So that whatever that stuff it is that you bought, that stuff had better start going up in price real fast. Are you following my logic? So you need to make a price appreciation return very quickly. This is clear? Just like when you buy a lot of houses, like you see in the Indian National Housing Bank data, there's a lot of ready to move in housing which is not occupied. Okay, the numbers are huge actually. So those guys, all those, to the extent that you use borrowed money to buy the house, you're paying interest on that house, but there's no rental income. So you better have those housing prices shooting up real fast. Otherwise, it's going to be a problem, right? So this is the same concept. So basically, this concept should be there in your mind that whatever you're going to sell, you're going to borrow and sell. Okay, and whatever you're buying, you are putting it on as an investment. Okay. If it's a currency, you just put it on deposit, okay? If it's a house, you put it out on rent. You need to try and earn a return on whatever you bought. Is this clear? Is everyone following? Okay. Yeah. Sorry, we have a question. Yeah, Garvin has a question.
Sir, I have a question that if I want to limit my profits also, so I should use a spot order, or I should use something else?
No. So your question is about the profit part of it, okay? So let's take the same example. So now I've gone long at 267 and I put in a stop at 264. We'll take the same example, okay? Is this clear, everyone? Okay. So I've gone long. I've taken care of my downside risk, okay? So I can't lose more than say around $3 rupees per share, okay? I've taken care of my downside risk. Now, as to where you will place the take profit, okay, we can get into the details of that. We can have more complicated calculations on that, but ideally it should be several multiples of your risk. Okay, if you're risking 3 rupees per share, you should not be happy with just making 3 rupees per share. You should make like several multiples of 3 rupees. Okay, so let's say in this case that I want to sell it at 311. I think it's going to go back and retest 311. So I want to give an instruction to the system that if the stock of TCS goes to 311, then I want to take profit. That's called a take profit. So it's clear? Okay, so the way you place that is, yes, this is also important for your management of your position. So now what I do, now this is, what is this order? Now this take profit order, when I have a long position, my position is long, this take profit order will be a sell order or a buy order? Sell order. Take profit is also a sell order. Okay, stop loss is also a sell order. Take profit is also a sell order. Okay, so now you come to this other definition of the order, which is that we have obviously now, and again, let's not go to the actual official definition, but let's work with the logic first. Okay, so this is a take profit order. Okay, so obviously now the question is this is going to be a sell order. This sell order is going to be above the market or below the market? Above the market. When my position is long, it will be above the market. When my position is short, it will be below the market, because it has to be something where it has to be at a level at which I capture some profit. So if I've gone long at the market, then the sell order for a long position, the take profit sell order for a long position is going to be above the market. Is this clear? Everyone follows? Okay. So it will be above the market. So now I've already identified the price by looking at the chart. So it's 311. So in this case, this will be called a limit sell order. Okay. So essentially now, if we understand the definition, we can look at the definition of a limit order. Order types. Okay. This is a limit order. Okay, so these are used. I've used stop order. O is for order. This is a limit order. and this is a market order. So actually we can now use this to understand this. Okay, we can freeze this view for a while, you can look at it. Okay, essentially this is what it is. It's an easy way to understand the definition of, now you already have a flavor. Now we can go and look at the mechanical definitions so that we are kind of like memorizing it, but it's still not that bad because you have gone through the logic, okay, a little bit. So now you already know the definition of a stop order. It's an easy way to remember, just like we covered speculators, hedgers and arbitragers with respect to market risk. Remember that arbitragers don't want to take any market risk, hedgers want to reduce their market risk, and the speculators want to increase their market risk. Okay, so easy way to remember, right? Similarly, we are going to remember, we are going to understand these three types of basic orders. Okay, stop orders, limit orders and market orders, and we are going to understand these three orders by reference to the price at which is whether the price at which these orders are executed, is it more favorable, less favorable, or as favorable as the market price. Everybody understands what the market price is? Okay, so like the market price of dollar yen right now is 108.53.50. This is the market price. Okay, so usually when we talk about one market price, because we're not talking about bid and offer, we're talking about the mid price. Okay, I seem to have lost the connection. Okay, but we are talking typically about the mid price. Okay, so let's say 250. So in the case of Tesla, it's 241, 5090. So it's let's say 70 or something like that. Okay, so that's your market price. So everybody understands the market price. It's the price at which the asset is trading at the current level. Okay, at the current period of time. That's the market price. So we understand these three terms: limit order, market order, and stop order. How are we going to understand them? With respect to whether the execution will be at a price which is more favorable, less favorable, or as favorable as the market price. Okay, so first we understand market order. Pretty obvious. A market order is one where the price is executed at, okay, oh, I don't have the internet. So at current market price. Okay, right? So a market order is, this is very obvious because it's called a market order. So the market order will execute your transaction. It could be a sell transaction or it could be a buy transaction. Okay, it will execute your transaction at the current market price. Is this clear? First category is clear. Market order always at the current market price. That's why, to simplify our decision making, I have assumed that everything we are doing at the current market to make life simpler. Okay, now what is a limit order? Limit order essentially will enter your trader position at a more favorable price than the current market. This is how you should remember it. Then you can flip it around for your buy sell situations, because when you are buying, more favorable is above the market or below the market? If I'm buying, if I'm going to be buying, then obviously I want to buy below the market. Okay, and when I'm selling, it will be above the market. So limit buy order will always be below the market. Limit sell order will always be above the market, because what do we know? We know that a limit order always executes at a price more favorable than the current market. That's all we need to remember. Okay, so then we can, so don't separately memorize your your sell order and buy order. What you remember is that limit order is always at a price more favorable than the current market, and market order is at the same as the current market. Okay, and then you come to the stop order. You can see how the definition is arranged. Okay, the stop order is kind of like the opposite of the limit order. So if the limit order is always executing at a price more favorable than the current market, then the stop order has to be the opposite. It will always execute at a price less favorable than the current market. Are you following?
Yes.
Simple way to remember. You just practice the framework a little bit, then you'll get the feel of it. So I don't think we are memorizing too much, but you understand the logic. but this is a good way to define orders. Okay, it helps you to understand these orders and remember them easily. Okay, so limit order more favorable, and stop order less favorable. Okay, so that's why you can see. So now we come back to the order that Garvit was talking about. He wants to place an order to capture the profit, where he has gone long on ITC at 267. 311. He wants to sell at 311. At 311, he wants to capture his profit. Okay, no more participation required. He wants to just take his money and run. Okay, so now this is going to be a limit sell order. So obviously this is an order to capture profit. So it is. So how do you work the logic? First you look at the chart and you can see clearly that if you have gone long at 267 and you're selling at 311, you're making a profit or loss? Profit. Okay, so you're making a profit. So therefore you're and what is good? This is also going to be a sell order. Okay, so it's going to be a sell order above the current market. Okay, so if it's a sell order above the current market, will it be a limit order or a stop order? Limit order, because it's more favorable than the current market. Okay, so therefore you go into this and you're going to be a seller, so you should hit the bid or the offer. Should hit the bid. The moment you hit the bid, it gives you some defaults. Check that the position size is the same. Your position is 100 shares. This is okay. Do you want it to be day? It has to be GTC, because it has to be. Now you can go on holiday after this. Okay, once you place a GTC order, it will remain. Yes. Yeah, value we have to change. This will be limit or stop? Limit. Okay, this will have to change. Now we have to change this to 311. Okay, is this clear? 310, 311, whatever it is. Okay, all right, is this clear now? So check everything. Sell order, limit order, amount, position size is the same. Make sure GTC is there, and this you don't have a choice at this stage. For this software we only have NSE data. Then now you transmit. Okay, now you get the green signal. That means IB is watching your order. Okay, is this clear? They have yeah. Okay, all right, is this clear now to everybody? How you have you have bracketed your position by not entering a bracket order, but individually entering the two legs. Now you're bracketed your order. Now you're taken care of. Now you can go on holiday for this trade. As far as this trade is concerned, you can forget about it until you revise your view. Okay, yes, what is the question?
How will we make profit on short selling?
Same thing. I've gone short 5,000 shares of TCS. Okay, so let's call up TCS. How do you make a profit on short selling? Very simple. You have gone short. Very simple. So you have gone short. That means you have to make a profit. The price has to drop or rise? Price has to drop. No, you have gone short. You have gone short, right? Okay, or even if you're thinking of selling, doesn't matter. If you have gone short or you're thinking of selling, either way, the market has to drop for you to make money. After you sell, the market has to drop for you to make money, right? So in this case, I have sold TCS, 5,000 shares of TCS. So I have to place, if you go back now, this we can't see much here. Let me go back to 15 minutes, right? So I have sold now. At some point, if you're talking about how to make profit when you have gone short, okay, wherever I've sold it, obviously I have to take a view on where I want to exit. You have to look at the chart and form a view as to where you want to exit. Okay, and there at that point you will place an order. Now this time this will be a what type of order? Limit what? Limit buy or limit sell? If I've gone short, it has to be a limit buy, because I have a short position. It has to close out my position. Both the take profit and the stop loss orders are supposed to close out your position. Okay, so this is, I've gone short, so it's be a limit buy order. Okay, so what I would do here is, maybe if I want to get out here, because here doesn't look very good, it looks like it's going to go up and rise above this. So let's say I don't have a strong view on the short position, so I want to say decide at 2100. Okay, so if I place 2100, what I do is TCS. Now I'm buying. I should hit the bid or offer? Ask price. Okay, so I hit the ask price. It gives me an order. First thing I do is change this to GTC. I want to go to 2100. Okay, it's a buy order, 100 shares. No, but it's not 100. It's not good enough. I need to buy 5,000 shares. Okay, so I have 5,000 shares. I'm buying at 2,100. Check, all this okay. It's a limit buy order. It's a limit buy order because it's a buy order which is below the current market. Below the current market is more favorable for buying or less favorable? More favorable for buying. So it's a limit order because I'm buying at a more favorable price, better than the current market. Then I transfer. Everyone is following?
Yes, sir.
Okay. Alright, so now I've got this order in place. So we'll see if this gets executed. But I happen to think this is actually going on. So a couple of other points that I would just make is, you have a total of 50 stocks available to you. Okay, the other important thing in speculative trading, if you are learning to speculate like a professional, first thing is obviously pre-plan your risk, control your risk. Orders always in the market, no discretion on that point. Another very important point, you have 50 shares to look at, 50 markets to look at. Don't feel compelled to trade if you don't have a strong view. Okay, there's no obligation to trade. There are 50 stocks, look at some stocks. If you don't have a strong view, move on to the next stock. See where you have a view. That's another very important of speculative trading, importance of speculative trading, important aspect of speculative trading. Do not trade unless you have a strong view. Okay. I'll just give you one last point. So this is very important. Let me just give you this lesson. You guys have heard of pokers? Have you heard of poker? Yes. One of your seniors, Sanish Chabra, is actually not taking placement because he wants to be a professional poker player. So it's a very good, I think it's a good initiative. I just told him make sure you document everything. So one of the important rules in poker is, if you don't have a strong hand, then you don't play, you don't bet, you just fold. Okay. So it's a very important thing that comes from poker strategy. A lot of hedge funds hire professional poker players because this is a very important skill to know that if you don't have a strong view, don't play. Just wait until you get a strong view. Okay. Now you keep on practicing with your charts by looking at your charts and trying to form views on the market. But if you don't have a strong view, don't play. This is clear. Move on to the next stock. You have 50 markets. Is this clear?
Yes, sir.
Okay. Anybody has any technical questions? Then I won't close the. Yeah.
Sir, the chart that you showed that all the offers were there above the market and below the market.
Give him the mic, yeah.
What was that chart called? I forgot the name. Sir, so as your order was placed green, that would also be shown there.
No, I'm not able to follow your question. What is the chart I showed you with all the offers were below the market?
Where all the offers are.
It was some different software.
No, sir. You showed.
It was a web-based charting app.
Bonds market.
Was it a web-based charting application,
Yes,
or was it a software?
It was a charting application. Finviz. I don't remember.
I don't think I showed you charts from Finviz. No. Was it this?
So then, in that chart, also I asked the question that how people can manipulate the market. That if they have, they can see that people are selling that.
Okay. So what I showed you was basically this. What I showed you was the order book.
Order book, right.
Okay. So if you right click, trading tools, book trader.
Book trader. So I wanted to ask that.
Yeah. So let's launch the book trader first. Okay. So here's your book trader. All right. Now you were asking about. So this is the market right now.
That my order is, you have placed the order is green. So that order, that would be shown in the order book or not?
Yeah. Your order, like if you look at any of these two, we don't have positions right now in the foreign currencies, but we have positions in Indian stocks.
Okay.
So if somebody looked at the ITC order book, these two orders that you have, they would be in the order book somewhere. This one is very far away. 311 is very far away. But it is technically in the order book.
Yeah, it would be in the order book.
If somebody looks at it, they'll see your order.
I just want to.
That's your question. Yes. Okay. Yes, Tanya, you have a question. You have a question. Technical question.
Daily profit and loss. This daily profit and loss shows that how much our net balance is left.
This is actually, they are marking to market every day. So I think this is coming from daily basis. Like say for instance, if you have gone short, say yesterday, okay, you have gone short yesterday at 270, 2280, okay, then today it has dropped to 2080.
Yes.
Then this 200 of profit is already shown yesterday. Now from today they are taking you as being short at 2080. So when it rises here, this is only taking care of the movement
That
today.
will reduce that.
That will, yeah, so it will show you actually as a loss now, because there's 2080 here and 2150, so you're losing money, but actually you're still making money from here. So the way you have to, the way you have to deal with this is you have to set up your own spreadsheet for your own practice and your own sense of the market and your positions. You should set up your own spreadsheet. Set up a spreadsheet where you have all these things noted down. Okay, like you have 5,000 shares of TCS, so you should have, you bought it at this price, how many shares, what was the initial risk. Ideally you should have all this information. That's how you get get your practice.
And so you said you should limit your risk. So what if I want to nullify my risk? Like at the price I bought it, so I put my stop loss at that price only.
That's not a good idea, because the market does not, it has to be, your stops have to be market relevant stops. You notice how I was placing stops?
Yes.
When I went long TCS around this time, okay? At that time I was using DG Sir's account. I had gone long around this time, around 2105. I had a view that it was going higher, but I placed my stop not at this level. I placed it at this level, which was a previous low, okay, from which a new high was made. So if the market went below this level, it would have proved my assumption about the continuation of the uptrend wrong. That's why the stop is placed there. So a stop has to be always placed at a point, at least the stop, okay, has to be placed at a point which is meaningful, from meaningful in the sense of what the market is saying about the status of the trend. Are you following what I'm saying? That when this market goes, if you take this as a 60-minute chart, it's an important question, and then I want to answer it. See, I go long over here. Hey, shut the door, Yash. Shut the door. I go long here, 2104. Why do I place a stop here? Because this, if it goes below this, then it clearly proves that this uptrend which began from here has been neutralized, because the pattern of higher lows is broken the moment a new low is made below this point. That's why my stop here. The stop has to be at a level which is meaningful, okay, as meaningful with respect to what the market is saying about the status of the trend. This level is meaningful because if the market goes below this level, the market is saying that this status of the trend here, which was incomplete, that has actually become neutralized. Are you following? So I understand your impulse for protection of loss and wanting to place it at the point at which you have gone long, but it's a very important question, and the answer is also very important, that the market does not care about the price at which you are long or short. The price at which you are long or short has no relevance from the point of view of the status of the trend and what the market is saying about the state. So stop has to be always meaningful. Are you following? You follow the answer. So this, never place it at the point at which you're light or at your long or short, because that has no meaning to the market. This has meaning to the market. In fact, even this has meaning to the market, the new high. The moment it goes above the new high, that means the trend is, the market is further confirming. See, it did not go below this low. Yeah, it did not go below this low, and it went above, eventually above this, which means the market is further confirming that your view about the continuation of the uptrend was correct. So these are all meaningful market movements beyond a certain price. But what price you are long or short at, that is of no meaning to the market.
So for the project, like we need to have some profit.
Yeah.
So
You need to have some, use your mic so that,
for the project, we
mic is not coming through.
for the project, like we need to make some profit.
Yeah,
Right?
ideally, hopefully,
Yes.
yeah.
So for
Like Tarun will make a loss.
So
Tarun has already promised that Tarun will make a loss.
that was what happens in his company.
No, I'm just pulling his leg. Yeah.
So sir, I want to ensure that I do not make losses. I at least maintain that position which I have been already given my account.
No, but that's
So
not the
that-
right way. That's
yeah.
not the right way to approach trading. You have to take some risk. Okay, so your stop, you cannot violate this basic rule that the stop has to always be at a point which is meaningful from the perspective of what the market is saying about the status of the trend. So ideally in technical trading, the stop always has to be at a previous high or low. Now, as I said, you can choose what high.
Yes.
You want to keep this low or this low or this low, that is your choice. But it should always be at a previous high or low, because that's what neutralizes uptrends and downtrends. I mean, it's the breach of those levels that neutralizes uptrends and downtrends. Is this clear?
Yes.
Okay, yeah.
Thank you.
Also, your technical question? Okay. Yeah, voice not coming through the mic. Yeah, you have a problem. Yes.
You were saying that we need to put our price above the market or below the market for stopping your losses. Right? So my question is, why don't we put the price above the market so that we make profit?
No. You can. We have done that. So you can see here where I am long ITC at 267. I have two orders. I have a stop order at 264, 263.95, 264. Okay. I have a stop order at 264. The objective of that order is to limit my losses, because I have no way of knowing which way the market will go. After I go long, you have to cover both the contingencies. In fact, this one is not important, I would say. I'll show you later on why you don't really need limit orders. You don't need take profit orders. You can just trail your stop. That we'll discuss later. But let's assume that. But what is most important is the stop order. Because when you go long, let's say when you go long here, okay, at ITC, you guys have technical questions, Chub?
No, sir, it is a general question about project.
Okay, no, that also you can ask. 1 minute. I would like to capture it as long as my battery doesn't go down. My battery is always in a precarious position. Okay, we have a little bit. Okay, 44%. Okay, so I went short ITC. Okay, I went in this example that we have here. I'm long ITC. Okay, at 267. So at this point, I don't know what's going to happen. Whether it's going to go up or down. So I have to cover both the contingencies, and especially I have to cover my loss side, because if I make 20 rupees of profit or 30 rupees of profit, it's not a big deal. Whether I make 30 rupees or 20 rupees or 15 rupees, that's not a big deal. That's not going to kill me. But what will kill me is my losses. So I have to protect my losses. So therefore I have to place at some point below the current market where my losses keep growing. At some point I have to place a stop order to take me out of my position and stop my losses. Is that clear? That part is clear?
Yes, that part is clear.
Now you're talking what you were saying earlier. I just respond to what you were saying here earlier. Why not just place a take profit order and forget about it? Forget about the stop loss. But how do you know? The moment you've gone long at 267, the next instant the price could just start dropping, and it may never come back. It may just keep dropping. 65, 63, 62, 61. It keeps on going lower, and never comes up. How do you know what's going to happen? So if you just keep an order to take profit, that's not good enough.
So you should always do both.
Yeah. In fact, I would even go to what we are going to develop in the next class. The take profit is not important. It's the stop loss that is important.
It's better to counter your losses rather than making profit.
Yeah, we are going to explain. We are going to have a way of capturing profit also. But the point I'm trying to make is that you don't even need limit orders. You can just operate with stop orders and market orders. In fact, you may make it. I'm trying to make it very, very simple. Is this clear?
If it goes to 3 levels, so you think that we should execute that at that point or?
That's based on your view. In this case, I've taken a view that it's going to go at. I'm going to exit at 311. Depends on your view. Like for instance, like TCS, I bought TCS because my view was that it's going much higher. So I think I won't take profit until it goes to 2300, 2400. and we'll look at the other aspect of that later on. How to operate only with stops. Are you clear now? Okay, Chug, what is your question quickly? Your question about the project.
Sir, we wanted to know that.
Use the mic.
Sir, it is written in the project, not at all.
No, it doesn't matter. We'll capture it so that I don't have to give the same answer to the other guys. Okay, ask your question through the mic.
Sir, for that official project trading account, we can begin trading since Monday, or are we supposed to keep that empty for them? Because we are practicing on the practice accounts.
No. You're supposed to have started trading from the previous Monday. This Monday, that is 2 days ago.
Yeah.
Or 3 days ago. You're supposed to have already started trading in your project trading account.
Sir, for example, our practice account makes more money than the.
No, that's all history now. Practice account is history.
No.
You can keep on practicing, but it has
Is it like the best of the accounts, or like
No.
that we have sent you is the final one?
only the project trading account which you're supposed to trade in from 3 days ago, from this last Monday. Only that's why I asked for the account numbers. Okay? That I want to see those. I want to lock in those account numbers, and later on I will look only at the performance of those account numbers for your project trading. So please make it clear to everybody, all you guys, you should have already started trading in your project trading accounts from the previous Monday, 3 days ago. Is this clear?
And so question: how do we check our final position on interactive broker site? For example,
You should also
have 10
keep
lakh
no.
rupees.
You should keep your own track of positions. Set up a spreadsheet. Let's see where your spreadsheets are. Set up a spreadsheet and keep your own positions. Okay, whatever it is. I bought TCS. Put the ticker TCS minus 5k position. Okay. Then what is the price at which I went short? Maybe 2150. Okay. What was my initial risk? Maybe I put a total risk of maybe 10,000 rupees. Okay. You should keep track. You should maintain a spreadsheet on your own. Aside from interactive brokers, that will help you to maintain, keep track of your positions, your total P&L.
Can't we see it on the interactive broker?
You can, but then since they are using mark to market from a day-to-day basis, you will get confused. They are marking to market on a daily basis, so they are showing your profit and loss only from the previous day, the close of the previous day. So therefore, what I'm saying is you follow this. This is part of your discipline in your trade. Every trade you do, keep a spreadsheet. What's the big deal of keeping a spreadsheet? You need to have a handle on your own positions. This is called a blotter. This is also something to learn. This is called a trader's blotter. Okay? Blotter as in, learn this term also. This is called a trader's blotter. Okay? A blotter is nothing but something like this. Not trade, let's call it whatever it is. Okay? Blotter. So blotter is nothing but this. TCS minus 5,000 at this. Eventually when you buy back, you can either write it against this row or again TCS plus 5. Every trade you do, you write down all the trades. That's called a blotter.
But in case if you want to see it on the interactive broker website, where can we see it?
You can see it here. You can see your net position. Here, net position here. Can you see the position?
This is in terms of shares. I'm saying in terms of the 10 lakh cash that we had, how much cash we finally have now.
Okay, that you have to see the value of the position. That you have to just multiply this. For that you need to refer to your own. You can look at this figure also. You can look at the account. Okay, but the account is in US dollars, so this will be a little confusing. You can look at your total cash figure here. You can look at this part of the account. Okay, and don't use your phone based software. Don't use your phone. This is your total cash. Okay, stock value is minus 10 lakhs. Okay, because you're short. Okay, so look at this part. But I would say that for the sake of your own practice, set up your own blotter. Is this clear? Set up your own blotter. This will give you good practice. Okay, you don't have any other classes now. Only lunch. Okay, or you're going up. Okay, so now we can close this. So please make